My dear 12th class economics students, Assalamu alaikum. Today we will discuss the circular flow of income, which is the first topic of paper B. Dear students, your paper B is related to the macroeconomic concepts. Macroeconomics is that branch of economics that studies the behavior and performance of an economy as a whole. This branch of economics focuses on the aggregates such as aggregate demand, aggregate supply, etc., and on the aggregate changes in the economy such as employment, national income, general price level, growth rate, etc. So, the first topic of macroeconomics that we will be talking about in this lecture is the circular flow of income in an economy. Dear students, in every economy there are three important economic activities that never stop, and these are production of goods and services, generation of income, or we can say the distribution of income to the factors of production in terms of wages, rents, interests, and profits. And third important economic activity is the expenditure of income in terms of consumption expenditure, which is the expenditure by households on final goods and services, and investment expenditure, that is the expenditure for the creation of new capital assets. So, the first phase of circular flow is the phase of production. In order to produce goods and services, the firms or the producing sector hires factors of production from the household sector, who are the owners of these factors. For rendering their factor services, the households get factor payments from the producers in terms of rent for land, wages for labor, interest for capital, and profit for entrepreneur. And this is the second phase of circular flow. So, in phase second, there is generation of income, or we can say distribution of income. The income generated during the process of production and distributed among factors of production is then being spent on the purchase of final goods and services produced by the producing sector in phase first. Thus, in phase third, there is the disposition of income, that is the expenditure of income in terms of consumption expenditure and investment expenditure. The process will not stop here. Rather, the consumption expenditure and investment expenditure generates further demand for goods and services in the economy, which again causes production of goods and services and then lead to generation of income and then again to expenditure of income, and the same process goes on and on. Production, income, and expenditure are flow variables. Thus, a continuous flow of production, income, and expenditure in an economy is known as circular flow of income. It is circular because it is difficult to trace the beginning and end of such activities in an economy. Production gives rise to income, which gives rise to expenditure, and expenditure gives rise to income again. It goes on continuously and indefinitely in a circular way. Dear students, Circular flow of income involves four important sectors of the economy, which are the producing sector, the household sector, the garment sector, and the rest of the world sector. Here we will consider the three models of circular flow. First is the two sector model, second is the three sector model, and third one is the four sector model. Let us explain them one by one in our coming slides. First, the two sector model. Here we consider a simple economy which consists of only two sectors, that is the producing sector and the household sector. So it is a type of closed economy with no involvement of foreign trade, that is the rest of world sector. And here we also assume that there is no involvement of government. Students, household sector is the supplier of factors of production, as they are the owners of those factors, and they are the demanders of goods and services being produced by the producing sector. Businesses, that is the producing sector, is the supplier of goods and services, and they are the demanders of the factors of production being supplied by the household sector. In this simple two sector model, the state of equilibrium is defined as a situation in which there is no tendency for the levels of income, expenditure, and output to change. This means that the expenditure of buyers, or we can say the households, becomes income for sellers, that is the income for firms or businesses. The firms then spend this income on factors of production supplied by the household sector, such as land, labor, capital, raw material, etc., thus transferring their income to the factor owners. The factor owners then spend this income on goods and services produced by the producing sector, which leads to a circular flow of income in an economy. The simple two sector model of circular flow is being shown here in this slide. Here we assume that economy consists of only two sectors. That is, there are only two sectors in an economy, and these are the producing sector and household sector. So in such a model, we assume that there is no involvement of government and foreign sector. We also assume here that the household sector, or we can say the households, spend their entire income. That is, they have no savings. So we can say that we have here a no saving economy. Before explaining this diagram, let me first explain you the two main aspects of the circular flow of income, which are the real flow and money flow. Students, real flow refers to the flow of actual goods and services and factor services across different sectors of the economy, while money flow refers to the flow of money in the form of factor payments and payments for goods and services across different sectors of the economy. The diagram here shows that household sector supplies factor services, that is, these supply the factors of production in terms of land, labor, capital, and entrepreneur to the producers. It is a real flow. These are real because they consist of actual factor services. And corresponding to the flow of factor services, the householders receive factor payments from firms in terms of rents, wages, interests, and profits, which is a money flow. The diagram also shows the flow of goods and services from the producing sector to households and the corresponding flow of consumption expenditure from households to firms. Thus, the entire amount of money which is paid by firms to households or the owners of factors of production as factor payments is paid back by the factor owners to the firms by disposing the income on the purchase of goods and services being produced by the producing sector. So far, we assumed that households spend their entire income on the purchase of goods and services, that is, they save nothing. But as we know that households tend to save a part of their income, which means that the part of their income is spent on consumption expenditure and part of their income is saved to meet the uncertain conditions. So the two sector model with savings is illustrated with the help of this diagram. The model here shows that households deposit their savings with the financial institutions and financial markets such as banks, insurance companies, cooperatives, stock markets, share markets, etc. And it is the business firms who borrow the savings of households from the financial institutions and from the financial markets for their investment purpose. Thus, through investment expenditure, by borrowing the savings of the households deposit in the financial markets and financial institutions, the saved income are again brought into expenditure stream and as a result total flow of spending does not decrease. Now coming to the three sector model, this model includes the three important sectors of the economy which are the household sector, producing sector and government sector. Here we will study a circular flow of income in these three sectors, that is the household, producing and government sector, excluding the rest of the world sector. That is, here again we have a closed economy. Here flows from household sector and producing sector to government sector are in the form of taxes. The income received from the government sector flows to the producing and household sector in the form of payments for government purchase of goods and services, as well as payment of subsidies and transfer payments to the businesses and households. Every payment has a receipt in response of it by which aggregate expenditure of an economy becomes identical to aggregate income and thus makes this circular flow an unending process. Let us illustrate the three sector model with the help of diagram given here. Here in this diagram we can see that government taxes the households and offers them transfer payments like scholarships, widow pensions, old age pensions, etc., and other services. The government also taxes the producers and offers them subsidies. Moreover, the government purchases goods and services from the firms and accordingly makes money payments to them. Now coming to the third model, which is a four sector model. Here, the model is adjusted to include the trade with the rest of world, that is the foreign trade. So it is an open economy model with four sectors of the economy, which are the household sector, firms, or we can say the producing sector, government sector, and the fourth one is the rest of the world sector. Each of the above sectors receives some payments from the other in lieu of goods and services, which makes a regular flow of goods and physical services. Money facilitates such an exchange smoothly. A residual of each market comes in capital market as savings, which in turn is invested in firms and government sector. Such a model is illustrated with the help of the diagram given in this slide. Students, in an open economy, a country has economic or we can say trade relations with other countries. So, in such an economy, there are exports and imports with the rest of the world. Dear students, goods and services produced within the domestic territory of a country which are sold to the foreign countries are called exports. On the other hand, purchase of foreign made goods and services by domestic households are called imports. This model here reflects activities of the rest of world sector along with other sectors of the economy. The producing sector receives payments for their exports to the rest of world and it makes payments for imports to the rest of world. It's also shown in the diagram that the rest of world sector makes factor payments to the household sector for their factor services. Household sector also receives transfer payments from the rest of world sector like charity, grants, etc. Now let's understand the leakages and injections in the circular flow. Students, leakage means withdrawal of income from the flow. For example, when households and firms save part of their income, means that part of their income is not spent on goods and services, it constitutes leakage as saving is withdrawn from the economy and saving is withdrawal of some money from the income flow. Thus, leakages are those flow variables which have negative impact on the process of production or on the process of income generation in the economy. Such variables reduce the flow of income in the economy, and some of the important leakage variables are savings, taxes imposed by the government, and imports. Savings by households and businesses that otherwise have been put to use or a decrease in the circular flow of an economy's income. Taxes imposed by the government also reduces the flow of income in the economy and money paid to the rest of world for imports also constitute leakages. Now the injections. Students, injections means introduction of income into the circular flow. When households and firms borrow the savings for investment and other purposes, they constitute injections. So, investment is injection of some money into the circular flow of income. These are those flow variables that cause an expansion in the process of production. Such variables increase the flow of income in the economy, and they can take the forms of investment, government and consumption expenditure, and exports. Thank you.